Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Hycroft Mining, ticker symbol HYMC. And so here I am recording this on Sunday, August 25th, after Hycroft closed on Friday, August 23rd, at a price of $2.35, being up about 1.3% on the day. And we can see that here with this inverse hammer here. Maybe we will be seeing a reversal, a bounce in the coming week. But I just wanted to go over the chart because I was doing some charting for myself and I noticed these Fibonacci retracements coinciding with this green uptrend. I wanted to go over that because I do think we could be right around some support and there might be some nice dip buying opportunities. But, if that does break down, there are some levels to the downside we could be looking forward to, getting some even greater discounts at. And so here, looking at the chart, I first got this red Fibonacci retracement here going back to the lows from June 26th. And as you can see from that, we have done more than a full retracement, breaking below $2.20 over here. So that level, is one that we've come to. There is another level on this Fibonacci that I will show in just a minute that might be suggesting a level of support to the downside, but I'll get to that once I've gone over the levels here. And so then in orange, I've got this retracement from the top here, hit on July 17th at a high of $2.93, so almost at $3 a share, and then coming down to the recent low, hit on August 9th at a price of $2.09. And so from that retracement, we have broken above a number of levels, but we did find resistance at the 618, that being at a price of $2.68.9. Did get a wick up to that level on August 20th, hitting a high of $2.62 before pulling back. And so I do have these other levels to the upside that might be acting as resistance if we do get a bounce here soon. And so those other levels are, between the 618 and the 65% retracement. That is the golden pocket. And so that 65% level is at $2.63.6. So maybe we do pull back up to that range, but since we already tested it, I could see the next level that we get to being the 786 at a price of $2.75. But since we have pulled back some, I have done another retracement here, this one in yellow, and I do think that this is pretty compelling. I was thinking that we might be breaking down lower, but with that golden pocket here, again, ranging from the 65% retracement up to the 618. That range is around $2.28 to 29 or 30 cents. We did wick below that level, breaking through it on the 22nd, so on Thursday, but we did close above, closing at a price of $2.32, with the low on the day being $2.22. So just a couple cents higher than this prior low over here, and also being a couple cents above the 786 at a price of $2.20.3. So, I find that to be pretty compelling that we did hold that golden pocket as support, wicking below it, but ultimately closing above. And also, I do find it very interesting that this uptrend that I have drawn on the chart, drew it a while ago, does seem to coincide with that golden pocket, and we have found that as support so far. So I think that the confluence of those levels does suggest to me that the bottom is in and or is near. Maybe we do pull back to around 225, but ultimately, find that as support before moving higher, like up to 275. But I did want to take a step back just to show where that green line originates from. It does go back in time to November of 2023. November 15th, we hit a low on the day of 163, and that also does correspond with a 1 for 10 reverse split. And so from that pivot low, I also have this other low from March 1st of this year, and we can see that from those two pivot points, we have this uptrend. And we did get a fake out break below that uptrend that also corresponded with a fake out break below this prior low here, going beyond that full retracement. So I think that this is pretty compelling, that this was a dip buying opportunity when we were trading below 220 and this uptrend. And considering that we are respecting this golden pocket and that uptrend, I do think that the bottom is in and or very near, and I do think we will be seeing a bounce. But if in case I am wrong, if we do start to trade below 220 and we do test $2.09, there are a couple levels you might have noticed to the downside based on these two Fibonacci retracements here. And so if I adjust the y-axis, we can see that the 1618 from the red retracement as well as the 1618 from the yellow retracement both are right around the same price, right around 175 or maybe 180 if we don't get exactly to that level. And so, I think that if we do break below 209, we could be testing these levels, getting a great discount there. However, one last thing that I did want to point out, if I draw another trend line up here, going from, these two pivot lows, that would be below 209, maybe coming down to around $2 a share. And, that also being a psychological level, $2 bills or, a lucky $2 bill. And so I think that could be holding as support. And I actually don't think that we're going to be coming down to 180 or 175. I just wanted to throw those up there as, really worst case scenario. But I view the worst case scenario on this chart here to be at $2 a share. But I think the realistic case scenario is that the bottom is in or near, and that 275 is going to be in the near future. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.